Today is edition of Back Roads of Illinois. We were bringing you lasted for farming sources and information sponsored by AgriGold in Central Illinois. I'm Cesar Delgado. I am your host for today's podcast with Lee Schultz from Everett. We were talking about the cattle markets and counting on the cattle on feeds report estimate before Christmas with Lee Schultz from Everett. We were discussing about the cattle markets for today's program. Here's Lee Schultz from Everett. We were talking about the cattle markets and counting on the cattle on feeds report estimate before Christmas with Lee Schultz from Everett. Welcome to the show, Lee.
Thanks for having me.
Let's begin with our discussion on the cattle on feeds report estimate before Christmas. Could you tell our audience about that a little bit?
Sure. So this would have been the last cattle on feed report for 2024. I'll remind us that there was one less slaughter day in November 2024. So as we look at the marketing's number and the placement numbers for 2024, we need to keep that into consideration. And then the cattle on feed number would have been as of December 1, 2024. I think most importantly, this report will be construed as relatively neutral as we look at the USDA estimates relative to the pre-report expectations. Everything was well within the range of pre-report expectations. I usually look for a 1 percentage point difference as a surprise in the report, and we certainly didn't see that here. A quick rundown of the numbers. If you look at the on-feed number as of December 1, that was down slightly from a year ago, down 0.3% or 34,000 head of cattle fewer than December 1, 2023. The placement number, which is this is the most watched number in really any cattle on feed report, that was down 3.7% or 69,000 head compared to the prior November or November 2023. That was slightly larger than pre-report expectations, but again, probably only about a zero point 0.4 percentage point difference. And then the marketing number there, it was down 4.5% compared to a year ago levels or 26,000 head. And again, within the range of pre-report expectations. Overall, I think this really confirmed a beginning to the tightening of our cattle on feed numbers. As you look at that November placement figure, that was the smallest since 2015 and comparable to the November 2014 number. We'll get the next cattle on feed report estimate here at the end of January, January 24th. That'll give us that next estimate. That's an important report because we will get the quarterly estimate of steers and heifers on feed. And so we'll look at that as kind of an indication of potential changing in expansionary behavior in the industry. As we look for more or fewer heifers on feed will be an indication of producers starting to expand their herds. We'll also get a more detailed cattle inventory report at the end of 2020 or at the end of January. So the cattle biannual cattle report will give us the breakdown of not only cattle on feed numbers, but also beef cow numbers, the calf crop for the prior year, as well as a few other notable inventory numbers given the replacements for or heifers for beef cow replacement. Again, that'll be an indication of where we are at in that potential expansion of the cattle herd.
How is the slaughter numbers for this week after the holidays?
Well, as we think about post holiday, and given that the holidays were both on Wednesday, if you think about Christmas and numbers for New Year's as well. Post holiday, we're always going to see some adjustments here into January. I look for those numbers to ramp up, obviously, from post holiday levels, but also certainly an indication that we are seeing a tightening of supplies and the relatively strong fed cattle prices. I think will be a little bit of a prohibited to larger slaughter numbers here in the coming weeks.
Lee, how does the corn futures has been working in the cattle markets for this first quarter?
Well, I would overall, when we look at feed prices and here particularly corn futures, they've been relatively bullish to cattle feeding margins, even though we've seen weaker corn prices be supportive of feeder cattle prices. Also, we've seen a much more robust or increase in fed cattle prices. So as I look at margins for the first and second quarter of 2025, we're looking at relatively strong margins for cattle feeders. I'm currently in that about $70 range per head. And so this would be finishing an 8 weight feeder up to 1,500 pounds in that, again, about $70 per head for January, February, and March. And then as we look at April, May, and June, I'm even more bullish for cattle feeding margins there of roughly about $100 per head profit for really the representative cattle feeder. Now, a big part of that is cost of production. So as I look at my cost of production figures, the first quarter estimates are down roughly about 10% from the first quarter of 2024. So that would be feedlot cost of gain after I purchased that feeder animal. And so not only have we seen stronger fed cattle prices, but we're starting to see decreases in that cost of gain. Now we're certainly remaining at elevated cost of gain because as we've seen feed prices decline, all other inputs, a lot of the inflationary costs have remained close to historic levels. And so that's really, I think, created kind of a new normal as we look at feedlot cost of gain here. And still, I think, kind of been a moderation in margins given where those fed cattle prices are. But as we look at that corn price, I would say certainly that has been more bullish to cattle feeding margins than we've seen here over the last several years in particular.
How is the February feeder? What happened to the cattle expansion since 1952? It's been a small herd from a long time ago. Lee.
Yeah, so I think it's important to always keep in mind we always make some comparisons to long history levels ago, right? But also realizing that we need a much smaller beef cow herd today to produce as much or larger beef production because producers and the industry at large has become much more efficient at what they do. And that's largely come in the form of higher carcass weight. So as we look at the beef cow industry or the cattle industry in particular, we're feeding to historic weights this year. And that's been part of the ability to mitigate these tightening supplies over the last couple of years of feeding cattle to heavier weights. So offsetting the numbers by pounds. Now that can't last forever. And I think that's where we're going to really start to see a tightening of these supplies in 2025. USDA's expectation right now is about a 5% decline in production, and largely that's going to come because of tighter numbers. We'll continue to offset some of that production by higher carcass weights. And so yes, we're seeing some of the smallest cattle numbers that we've seen in 70 plus years. But also we're not seeing that as tight a production because of, again, the efficiency in the cattle industry.
Is there anything else that would you like to tell the cattle producers about premium risk with LRP in the Midwest with the Midwest?
Well, I think it's important to really broadly talk about risk management here because as we've discussed so far, the historically tight cattle supplies and historically tight cattle prices has really provided a lot of opportunity for cattle producers in the form of higher prices and at times larger profits here, as we talked about. The cattle feeding sector, at least for the first 6 months of the year, looks to be relatively profitable. I think for the cow calf sector, you're looking at, again, some of the highest profits that we've ever seen, even surpassing the records we've seen in 2014 and 2015. But with those high profits come a lot of potential for risk. And it wasn't that long ago, if we think back to 2023, we've seen a dramatic fall in calf prices as we got into the fourth quarter of the year. So as we think about, opportunities to manage some of that risk, I would encourage producers to really look across the full suite of price risk management tools that are available. And so, we've customarily had futures and options markets, and those tools continue to work very well for producers. We've had changes to the livestock insurance products like livestock gross margin and livestock risk protection that have made those more attractive to producers in the form of subsidies on the premiums and some of the details of those individual programs. And so overall, I think important here to not wait for the market to come to you. Especially where there's some profitable margins. And as I alluded to here in the next 6 months for cattle feeders. And so the opportunity to establish price floors, ensure prices or margins. And also, I would very much encourage set several target prices to allow for really the upside in the market. So not putting all your eggs in one basket, as the saying goes. But remember, much of the last several years, producers have been on defense. And I think, here is the opportunity now to go on offense, take advantage of these current and future market opportunities.
Where people can find you for your consulting services for their livestock, planning on the prices, tools, risk for right now.
I would encourage producers to visit our Everag various websites as you look at tools such as livestock risk protection, livestock gross margin, and really the contact information for all our livestock analysts and risk managers, as we are a source for the industry to help in their price risk management objectives.
Do you have any final thoughts on the new worm outbreak?
Yeah, so as we've talked about we let off the show with the cattle on feed report. Certainly, as we think about placement numbers, I would argue that the November placements were not largely impacted by the screwworm outbreak and the suspension of trade of live animal imports from Mexico. We had roughly 3 weeks of trade, and so you could argue that there was some impact there, but largely the placement number, I think, was reflected of the overall tighter domestic supplies. That will not be the case as we look at the December data. Typically, December is the largest feeder cattle import month of the calendar year. And so as we've seen suspension of imports there, that will certainly impact that placement number when we get the next cattle on feed report here in December. That does not mean once we see resumption of that trade, there was talk that we may see some resumption prior to Christmas. That did not happen. I look for that to potentially occur here now in January once we kind of see normal operations of some of those ports. But that will likely be a slow resumption of that trade. So, overall, we're likely to see some impact here of fewer feeder cattle placements, and some of that due to the lack of imports from Mexico, at least short term here. This comes at a time when we're talking about relatively tight supplies, and so you could argue that the impact is a bit more exacerbated than if it was at a time when we see much larger feeder cattle supplies in our industry. And so certainly a market factor to continue to monitor as we look at the impact of fewer feeder cattle imports from Mexico.
Thanks, Lee.
Thanks for having me.
This is Lee Schultz from Everett Back Roads of Illinois. This is your beef check boxes from the Department of Agricultural. The choice cut value is $327, 10 per box. Let's take a look at the select cut. Select cut is 303, 33. This been your choice cut value on Back Roads of Illinois. This is your commodity market for this afternoon, sponsored by Kyle Bumstead. He is your commodity broker from Allendale Incorporated. March corn is up at $4.56 at the half. January beans are down at $9.97 1. May Chicago wheat is up at $5.58 on the quarter. Let's take a look for the livestock markets on this afternoon. April live cattle is up at $19.97.75. February feeder cattle is up at $267.55. February lean hog is down at $85.75. Thanks to Lee Schultz from Everett Back Roads of Illinois on the cattle markets. This been Back Roads of Illinois. I am Cesar Delgado. You have a great day.